What's going on, guys? It's Stock Picks by Tim. I'm sorry for the glare in the room. Early morning, the sun likes to shine through here. I gotta fix my blinds, I guess, or something. I think it's kind of nice. But let's get into this video. I want to look at the CPI. It did come in a little better than expected. We're going to look at that, and we're also going to look at the SPY and what's been going on there. What's the market doing? So let's check this out. Don't forget to like, subscribe, hit the notification bell if you get something useful out of this. Check out my Discord. Check out the links to the free stocks down below and cryptos. If you feel like supporting me and becoming a member, feel free to do so. Working on giving you guys some worthwhile perks. But let's take a look at CPI. But first, pulling up TradingView's heat map, you'll see that we've got a bit of a mixed reaction here. You'll see that some tech is doing pretty good while others like Tesla is down. EVs have seen a huge run lately. Maybe that's why they're pulling back a little bit. You'll see health stocks, retail, consumer non-durables all getting beat up. Everything else generally green, if not flat, which would typically be surprising with such a polarizing event coming out, or such a catalyzing event, I should say, coming out here, which is the CPI. But one thing to remember is how much we ran up towards that event. Now let's look at the numbers here. I'll leave this link down below for you. I definitely prefer using Yahoo Finance. When I'm looking for any stock news, I'm not sponsored by them in any way. I just prefer using Yahoo Finance. I think they have pretty good reporters, pretty good article writers. They aren't all written by bots like some others. And here we have it, December CPI, inflation rises 6.5% over last year's numbers, and a 0.1% decrease month over month. Now, while this is definitely good to see, it's a step in the right direction, we do know the Fed has some interest rate hikes ahead. And here's a great little paragraph to kind of put this into context. Even as price pressured eased from the 9.1% peak of the current inflation cycle, last month's reading marked the second hottest December CPI, so the second highest CPI print since 1981, topped by only 7% or 7.1%, excuse me, in December of 2021. So we still have some of the highest CPIs coming out looking at a month standpoint. And another thing to think about why, at least right now as of this upload, we're somewhat flat. This is said by Maria Vasilau, sorry if I butchered the name, at Goldman Sachs. She said the market has priced in a very optimistic scenario about CPI in the previous days, and I think she's absolutely right. And she goes on to say that the numbers came in at exactly the expectations level, and goes on to add that this means that some of the optimism in the market may get unwound both in equities and fixed income. And what matters most for the market is the terminal Fed rate, not so much the pace of hikes. As we get closer to the terminal rate, the pace of hikes need to slow down. So she's basically just saying, like, don't worry too much about the pace of the rate hikes. Worry about the actual terminal rate. Where are we heading to? What's our target? Now, getting into a couple of little details here real quick. We've got the shelter category of CPI, which is 30% of the overall CPI and 40% of core. That increased 0.8% over a month and 7.5% over the last year. But remember, as we get through this year, what we'll have to compare against from the last year will get a little bit better. And also we have here that a sharp drop in gas prices was the main contributor to last month's decrease in the monthly reading, more than offsetting increases in housing costs. Prices at the pump plunged 9.4% across December after a 2% jump in November. So gas seems to be going down as of this report, which is good. In my area, gas has been just kind of lingering around $4.50, which definitely sucks. And then we have food prices did increase 0.3% last month, down slightly from November's 0.5% increase. And I'll leave this down below for you as well, but it just kind of shows you month over month how things have changed. And this is essentially the different changes in percentage through different items like apparel, new vehicles, things like that. And one thing you'll see is used cars and trucks has been actually going down. Alright, now I did want to pull up the SPY and just show you what's been going on there. Ever since the new year, we have been pushing higher, and this is about to create new highs, at least for this new year. We do seem to be finding resistance here at 398.50. Once we break out of that, we can definitely push towards 400. But I think that'll become a resistance very likely. When you zoom out, you'll realize that we are in a longer term downtrend. I personally don't think we're out of the woods yet. Has the low been established at $350? I honestly don't know. I don't think anyone can tell you with 100% certainty. All I can say is I will welcome those prices with the SPY, as it means a better return of my investment, or ROI, on the long term when buying my high conviction stocks. But just be careful. I wouldn't be surprised if we find resistance here. You're definitely going to be wanting to watch out for 400, which is psychological, but also watch out for roughly 405. This could be a potential point where we break out and start moving higher. I kind of doubt it, being that we still have some rate hikes ahead and we still have some uncertainty with CPI. Yes, it's looking better. We are still very far away from our 2% target, which the Fed has. And they have stressed many times that that is their focus. Hopefully you guys got something out of this video. I'm definitely going to have a great time editing this here. Let me know how you feel about CPI. Is the market now on recovery mode, or are we going to be going down from here? Thanks as always, guys. Take it easy.